Good morning, this is Mark with a quick update for Wednesday the 2nd of October. I said to you on Sunday that the last 3 weeks or 2 weeks prior to this week I have had very successful trades on the CAD from a weekly chart. And think on guys, this is a case of sitting down at a weekend and working out where you're looking for your entries. And what I'd said to you is that this was the main area for the CAD and I was looking for an entry at 102.760 and therefore I got 10 pips above when I placed my order. This one is now currently, as we speak, 80 odd pips in profit, and that is from analysis done on a weekend. And as you know, I use a top-down approach. I start at the higher time frames, monthly, weekly, daily. I trade wherever possible, and worst case scenario for me if I have to go down to a 4-hour chart. Now, I also have shown you many times in recent months how I trade gaps at the market open. And on Sunday night, for me, the Euro-Yen opened with a big gap. And this gap here was 100 pips. And I've shown you how to play this, and I've put the link in again in the post. But I did my standard practice, stop just below the 1 hour candle, take my first profit off at 25 pips and leave the balance to run. Now, unfortunately, I only made the 25 pips out of this because the damn thing came back down and took me out by a few pips and then went to 150, and a similar scenario on the dollar yen. Once again, it came down, took me out, so I only ended up with my first point of profit. But it's a profit and it's easy and it's at the market open, so therefore time wise it's ideal because you can often make a week's profit just at the market open. Other things I showed you during the week, went into great detail with the dollar Swissy, how despite the fact that we were in a downtrend, this is a monthly chart, but on a daily it's more clear, I was still only interested to long this pair. And I went into great detail explaining how this is major previous support and resistance and a whole number and lots of reasons why it was of interest. The monthly Bollinger started to close as well, which was a clue. But when I talk about clues, I go down to a 4-hour chart, and here you have on a 4-hour chart prior to this candle, if you got in here then it's still a valid entry, but you're already 20 odd pips behind. But the things to notice here, we had MACD divergence showing. Price was clearly coming down here, but MACD was going up. Stochastics were rolling up, and this 4-hour Bollinger Band price was clearly outside the Bollinger Band. So anywhere along here, you would have been starting to look for a trade. You place your order at 90.10, and currently you are 40 odd pips in profit. I say this was also a valid signal because this is a pin bar reversal candle, so the more conservative amongst you could have waited for that one. Other than that, I was saying with the Aussie dollar, it was all over the place, but if there was anywhere I was going to take it, I would short at 9400. Currently 60 odd pips in profit. To be honest, I didn't take it. It was too messy for me, but it worked anyway, just how it works sometimes. Other ones, Euro USD, I was explaining that for me, I needed a big pullback on this pair, and thankfully I didn't go long. It's just been messing around and bobbling around. Finally, the pound. Now on the pound, I was suggesting if price broke above 161.50, I would look for a pullback with a view to a long, and it's missed my entry this morning by a couple of pips, which is very annoying, but I am now wary with this. I was wary anyway because this is a pin bar reversal candle and this is MACD divergence again. Price is going up and yet MACD is pointing down and stochastics starting to roll over. It's now Wednesday morning for me, and as I said at the beginning of the week, my goal was to be finished by now. So that's it for me. Job done for the week. Walk away, get on with other things. Have a great day.